All right, guys, want to go over Bitcoin's recent price action and how you can take advantage of ranging markets. Now, a lot of the time I recommend trend trading or trading with the trend, where if price is making higher highs and higher lows, you're going to be looking for long positions at key support and resistance levels with a key fib confluence. And the opposite is true for a short position in a downtrend. But sometimes price will range, as we're seeing right now. Currently, we're under a psychological resistance level at around 29K, a key horizontal resistance. And you can see that price is kind of just ranging below this resistance. Very, very boring, but believe it or not, this is when you can make the most amount of money trading. And I'll explain why in just a second. Now, these levels that I have drawn out on my chart, I posted in advance in the Pro Discord. So if you'd like to join the Pro Discord to get my TA setups, as well as the #1 trading view indicator, EzAlgo, which comes with buy and sell signals, automatic support and resistance, and a huge update coming soon, then be sure to click the first link in the description below. But I'm super excited to share this with you guys because this doesn't require a lot of technical analysis. These setups are pretty easy to spot and the risk to reward is often very high. So these were the levels that I was looking at, and you'll see that what I'm doing here is identifying these high and low wicks. Now, the reason I'm doing this is because I've identified the market trend, right? We're in a ranging market. Therefore, I'm going to be looking to take longs at a support level and shorts at a resistance level. But a lot of you guys think like retail when you need to start thinking like the big banks and the smart money, right? They're not going to be placing bids at a support level only, right? They're going to wait till retail gets stopped out and then enter the position, which is why I like to trade swing failures in a ranging market. Now in a trending market, there are other strategies that work better, but in a ranging market, nothing beats a swing failure pattern. So what I'm looking for here is for price to swing fail these lows, right? You can see that price has rejected from this low before, and I'm looking for price to come below that and then start to reclaim the level. And you're going to enter a market order as soon as price is reclaiming that level. So you're waiting for price to come below the level, and then as it starts to come back up, that's when you're going to enter a long position somewhere right there. So I can tell you right now, if price comes up to this resistance level at the top, or this local high, I should say, I'm going to be looking to take a swing failure short position as price is falling back through that level. But remember, price has to go above before it goes back below. So I don't want to see something like this, right, where it comes up to resistance and then goes down, right? Technically, that would be a valid short position, but what I like to do is wait for that swing failure pattern. So wait for price to come up and then start to come back below, which is when I'll enter the short position. Now, this is very, very powerful because retail will be bidding short, for example, somewhere around here, right? Somewhere around here because it's this, general resistance level, and they'll put their stop loss, right above this swing high. So when you're catching a swing failure, you're effectively fading retail in a way because they're going to be placing their stop losses right above that high, and you're going to take them out, liquidate the retail, and then go back down. Now, a lot of the times when you guys get stopped out on your trades, that's exactly what's happening. You guys are acting like retail, putting your stop loss, right above or below a swing low. And then what smart money will do is push price past that level to stop you out, and then it'll end up going the way that you thought it would in the beginning, right? So that happens all the time. It's very unfortunate, but depending on your trading strategy, that will happen. But swing failures, I find, have a very high win rate if you use them correctly. I have a few random stuff on my chart here. But these were the levels that I was looking at for, actually 3 to 4 days in advance. So I was looking to take shorts up here and longs down here. Also, if price comes down here, I'll look for another swing fail of these candle lows way back here. So another swing fail there. Now, what you can do to add some more confluence when you're trading swing fails is use the easy oscillator. So make sure that momentum is below the zero line for a long. Best case scenario, you want to see the momentum in these oversold zones. So when price comes down to this level, the swing fail, you want to see that the oscillator is in the oversold zone or at least near it, opposite for a short, right? I'm going to go in replay mode and show you guys how you could have done this, a few days ago, right? So again, we're identifying the local candle high. We're in this sort of ranging market, right? What we're going to wait for is for price to come above that level, and we're going to be entering a market order as price comes through that level. So, maybe right here, and you're going to be targeting, these candle lows over here. And you can see that price comes down with that sell signal, and you can do the same thing on the way back, right? We also have some candle lows over here. So I'm going to press Alt H, and you can enter a long position on the swing failure going the other way, and that would have been a winning trade as well. Again, another swing failure of this level, enter a short position, and you're going to be targeting this support level. So you can see just how powerful this strategy is. Is every trade going to be winning? Obviously not. There will be some stop out trades. For example, over here, when I was catching the swing failure, if my stop loss was a little bit tighter, I probably would have been stopped out, but that's okay. You can just re-enter the position. And if you want some more confluence to actually enter these swing failure patterns, what you can do is use the EzAlgo buy and sell signals on the Heikin-Ashi candles. For example, I'll go to the 5-minute time frame on the Heikin-Ashi candles, and you can see we would have gotten that EzAlgo sell signal with the sell dot on the Easy Oscillator and these reversal signals here on EzAlgo as price is going through that resistance level. So this would be our entry with our stop loss right above those candle highs. Now we did get stopped out, but we can re-enter again with that sell signal. The only reason we got stopped out on this trade in particular is because this was the FOMC day. So there's a lot of volatility in the markets. It's usually not like that. But like I said, you could re-enter on that sell signal and you can see that price comes down right to the level that we're looking to swing fail. We get the reversal signals. The Easy Oscillator is in the oversold territory and we get that buy signal on EzAlgo. So this is like clockwork, guys. You want to use all these confluences together when you're entering swing fails. So what I like to do is have a split screen where I have the Heikin-Ashi on one side and then I have the regular Japanese candlesticks on a higher time frame on the other side of my screen. Now, for example, in the recent price action, we can do the same thing, right? Go to the Heikin-Ashi candles. We have those reversal signals, the Easy Oscillators in this oversold territory, and we get that buy signal on EzAlgo as we're swing failing. So that's a 2% move, you know, in less than an hour, right? So these are really, really incredible gains. Don't sleep on the EzAlgo buy and sell signals on the Heikin-Ashi candles. I'm telling you guys, when you use them at key support or resistance levels or levels that you're trying to swing fail, these can be very, very powerful. Try this out for yourself. Again, what you're going to be doing is identifying the high and low candle wicks, pressing Alt-H, drawing a horizontal line, and then waiting for price to break below that level and start to reclaim as your basis for a long or short entry. It's really that simple, guys. Some of the top traders in the world, this is how they trade, right? They trade horizontal resistances, they trade swing failures, they trade key fibs, and that's it. So keep it simple. Like I said, if you guys want the trading view indicators I use, be sure to click the first link in the description below. That's it for me. I'll see you guys next video.